Welcome to the deep dive. Today we're going deep, really deep into PTT. They're a huge player in global energy, right?
Absolutely, a real heavyweight.
And we want to understand how they're handling, some pretty tough conditions right now. We're talking a challenging economy and those tricky energy prices.
That's exactly it. And to paint this picture, we've pulled together insights from, well, quite a few sources you shared. We've got analyst reports from InnovestX, LH Securities, direct comments from the CEO via Mitty Hoon, and even PTT's own Q1 2025 financials.
Okay, good. So our goal here is to cut through the noise, the corporate speak, and really unpack PTT's actual strategy. What's their game plan to, well, stay strong, protect their earnings, and maybe find new growth?
In this, very dynamic landscape.
Exactly. So where do we start? The challenges?
Let's start there. I think it makes sense.
Okay.
The sources all point to the same thing, pretty much. A challenging global economic outlook,
Right.
which is dampening demand, and that's happening alongside a continued decline in oil prices.
Okay, and do we have specifics on those oil prices? I think InnovestX had something on management's view for 2025.
Yeah, they did. InnovestX notes management is bracing for the average Dubai crude price to fall. They see it going from around $79.60 a barrel in 2024
Okay.
down to somewhere between $65 and $75 a barrel in 2025.
So that could be, what, nearly a $15 drop per barrel?
Potentially, yes. It's a significant potential drop.
And how does that translate? I mean, what does that actually do to PTT's finances?
Well, the hit is substantial. The InnovestX report, it breaks it down. A $10 drop per barrel in oil prices. That's projected to cut PTT's consolidated EBITDA.
That's the earnings before interest, taxes, depreciation, amortization.
Exactly, a key profitability measure. It cuts it by around 20 billion barrels.
Wow, BT20BN for every $10 drop.
Yep.
Okay, that really highlights why they need a solid defense, and it sounds like they're not waiting around. Midhoon mentioned a war room.
That's right. Setting up that war room. It's a clear signal,
Yeah.
They're being proactive.
Not just reacting.
Exactly. Preparing for possible recession, market swings. Midhoon says it covers 5 key areas of their business. So looking everywhere.
Across the whole group. Okay,
Yeah.
so this preparation, it's tied to a specific financial goal for next year, right?
Absolutely. It all feeds into this target. PTT is aiming to generate about 25 billion baht in gains in 2025.
Gains specifically to offset the bad stuff.
Precisely. To cushion the blow from, say, lower oil prices or a slower economy. Both InnovestX and Midhoon flag this BT25BN target.
Okay, that's a big number to pull out of the hat. How are they planning to do it? What are the main sort of levers?
Well, there seem to be 4 key pillars here. First, and maybe the most obvious, is a really intense focus on cost-saving measures.
Right, cutting costs, improving efficiency.
Exactly. Both reports hammer this home. It's across the whole PTT group. And Midhoon gets specific, mentioning a project called Mission X.
Mission X.
Yeah, it's all about operational excellence, aiming for, get this, 30 billion baht per year in value creation by 2027.
BT30BN a year, just from being more efficient. What does that actually look like? Like optimizing pipelines, better purchasing?
Think all of that. Streamlining maintenance, getting better deals on supplies through bulk buying, cutting energy use in their own operations. It's finding those savings everywhere. They add up.
Makes sense. Lots of small wins adding up big. Okay, what's pillar number 2?
That would be asset monetization. Basically, selling off assets they don't see as core anymore.
Selling things off, what kind of things?
The sources mention non-core assets of subsidiaries, specifically things like utilities and infrastructure that can be shared within the group.
So stuff that isn't their main energy business, but maybe supports it, why sell that?
Well, the logic is interesting. If they sell to, say, a specialist operator, it could boost efficiency. Plus, PTT doesn't have to spend capital maintaining or upgrading those assets in the future.
Ah, okay, frees up cash.
Exactly. Generates funds right away. They can use that to pay down debt, lower interest costs, or maybe reinvest in those future growth areas we need to talk about. And InnovestX says the expectation is they'll get fair market value.
Smart move to streamline and raise capital. What's the third strategy?
That's about profit enhancement initiatives, or you could call it group synergy. It's about finding more value within the group they already have.
Okay, making the existing parts work better together.
Pretty much. Midhoon mentions projects P1 and D1. They're about centralizing supply and market management. The target there is BT3BN a year by 2028.
And there's another one. Axis.
Right, the Axis project. That one's about leveraging digital tech and AI for efficiency. Bigger target, too.
Thank you.
ET11BN a year in value by 2029.
Centralizing buying using AI. Can you give us a feel for what that means day to day, like AI predicting oil prices or something?
Could be. Or AI optimizing refinery processes for better output. For P1D1, think maybe combining purchasing power for chemicals used by different subsidiaries to get better prices, or coordinating marketing efforts. It's about avoiding duplication and working smarter.
Got it. Significant internal improvements. And the last pillar for protecting earnings.
Seeking strategic partners. PTT is looking to bring partners into some key subsidiaries.
But they're not selling control, right?
That's the crucial point the sources emphasize. PTT plans to keep significant ownership and control. Any partnership has to clearly benefit and strengthen the whole PTT group. It's about adding expertise or market access, not just selling shares.
Okay, bringing in strength but staying in charge. So beyond just defense, it feels like they're also taking a really hard look at their whole business mix.
They definitely are. Midhoon explains this review process. They're looking at all their different businesses based on two things. Attractiveness, is the market itself good, and PTT's right to play.
Right to play, meaning are they actually good at it? Do they have the strength to win?
Exactly. Is it a good market? And are we equipped to compete effectively?
Sensible framework. So where is this leading them? Are they doubling down on oil and gas or...
It's a bit of both, actually. They're definitely reinforcing their core hydrocarbon focus. PTTT, that's their exploration and production arm, is boosting gas production in Thailand. Fields like Arthit, Sinphuhorm, that's directly about boosting Thailand's energy security.
Crucial for a national oil company.
Absolutely. And they're expanding overseas, too, like taking that 10% stake in the big Gasha gas field in the UAE. Plus, they want to be a bigger player in LNG, becoming a regional trading hub, leveraging their infrastructure, importing potentially 11 million tons a year.
So hydrocarbons remain central, but what about the non-hydrocarbon side? That's where the pivot comes in.
This is where you see some really interesting adjustments. Mediahoon notes that in some non-core areas, because of high competition or risk, PTT is pulling back a bit to save capital.
And the EV value chain is a big example of that shift, isn't it?
A major one. It looks like they're rethinking their big push into EV manufacturing, like that Horizon Plus joint venture.
So let's focus on building the cars themselves. Where are they shifting to?
They're moving towards parts of the EV chain where they have, well, an existing advantage. That means a big push into the charging business.
Using their gas station network.
Exactly. Leveraging OR's massive station network, and also becoming a major distributor for EV brands. The reports mention focusing on Chinese brands like XPeng and Zeekr.
So selling and fueling EVs, not building them.
That seems to be the pivot. Reducing their stake in Horizon Plus fits right into that mitigating the manufacturing risk.
Clear strategic shift there. What about other areas like logistics or life science?
Similar adjustments. For logistics, they're stepping back from anything not directly supporting their core energy business, only focusing on projects that create synergy within PTT. And in life science, they're narrowing the focus sharply, concentrating just on pharmaceuticals and nutrition. And the plan there is for those businesses to become self-funding and rely on partnerships with specialists.
Right, so trimming the edges, focusing the non-core stuff. But where's the future growth supposed to come from?
The sources are pretty consistent on this. Gas and renewable energy on one hand, and hydrogen and carbon capture, CCS, on the other. These are the designated future growth engines.
And those tie into their climate goals, net zero.
Directly. PTT has those net zero targets, 2050 on an equity basis, 2060 overall. Midhoon and LH Securities talk about their plans. They're seriously studying CCS feasibility, even a potential CCS hub model, and exploring hydrogen, low-carbon hydrogen, ammonia for power.
So balancing today's needs with tomorrow's energy transition. Let's look at the numbers. How are they actually doing right now? Q1 2025.
Okay, the official filing, it shows a net profit of 23.315 billion baht for Q1 2025.
Which is still a huge amount of profit for one quarter.
It absolutely is. But context matters, right? You have to compare it. Q1 2024 net profit was higher at 28.967 billion baht.
So a decrease year on year for the quarter. Shows that pressure we talked about.
Exactly. It reflects that challenging environment. Still very profitable, but feeling the headwinds.
Given that, what about shareholders? How are they treating them?
Well, for 2024, they paid a dividend of 2.10 baht per share. Midhoon points out that was actually their highest dividend ever since listing.
Really? Even with the pressures?
Seems so. And looking forward, Innovest analysts expect a pretty solid dividend yield, like 6–7% over the next few years. Plus, there's a share buyback plan for 2025.
Okay, dividends and buybacks to support the share price and return cash.
Right. It's about managing liquidity, boosting confidence, returning value during this period.
And what are the analysts saying about the stock's value now? Is it cheap? Expensive?
Well, InnovestX, back in May 2025, kept an outperform rating, target price BT41. LH Securities, though that was earlier, August 2024, had a trading buy at BT37. What's interesting is InnovestX noted it's trading around 0.7 times price-to-book value.
0.7x PBV. And that's low for them.
Yeah, below their 5-year average.
Yeah.
So analysts seem to think there might be some value there, despite the challenges.
Okay. And underpinning all this strategy and financial management is this idea of financial discipline.
Yes, that comes up repeatedly. It's foundational right now. Tight cost control, careful spending, protecting their credit ratings, all essential for navigating the uncertainty and funding that future growth.
Makes sense. Okay, we've covered the strategy, the performance. What are the big risks the sources flag? What could go wrong?
Several key ones. The obvious are, the economy staying slow or oil prices falling even further. That hits demand, could cause inventory losses.
Market risks.
Right. Then there's the risk around those asset sales. Maybe they don't get the price they expect, or they have to write down asset values. That's impairment risk. Always the risk of regulatory changes or government intervention, especially for a national energy company. And critically, ESG risks.
Environmental, social, governance.
Yeah.
The clean energy transition challenge.
Huge challenge. Managing their environmental footprint, navigating the transition itself. And Mityhun also linked that war room to the broader risk of the trade war, so geopolitics is clearly on their mind too.
It's definitely a complex environment. Now, before we wrap up, Mityhun did briefly mention PTT doing some social good stuff.
Yeah, just a quick note, they helped out with earthquake relief in Thailand and Myanmar. A reminder they have a role beyond just business.
Good point. Okay, so let's try and pull this all together. The picture we get from these sources is it's a major energy company, PTT, being very active, very deliberate in how it's facing a really tough global situation.
Right. They've got this detailed plan, cutting costs hard, strategically tweaking their portfolio, selling some things, focusing others, and making clear moves towards future energy, like EV charging and hydrogen.
It's a real balancing act, isn't it? Shoring up their traditional strengths, which are vital for energy security, while also placing bets on these new opportunities. And all while trying to keep the finances solid and shareholders happy.
It really is. And what's interesting is seeing how all these different moves, selling a utility asset, boosting Thai gas output, becoming an EV dealer, exploring hydrogen, they all seem to fit into this bigger, cohesive strategy for resilience now and relevance later.
So here's something to think about for you listening. Given these very deliberate steps PTT is taking, pivoting in EVs, investing in hydrogen, but also reinforcing its traditional gas role for security, how might this complex juggling act actually reshape Thailand's whole energy landscape over the next few years? And maybe more broadly, what does this kind of transition by a major player tell us about the future of energy itself?